Good morning, military millionaires. Today we are going to talk about the do's and don'ts of taking out a personal loan to build credit. Now, before we dive in, don't forget to subscribe to the channel and click the little bell so that you get notified when we post new content. If you haven't yet established a credit profile, it's time to start one now. Right? One of the main reasons that you should build a good credit score is to qualify for a loan with favorable repayment terms and interest rate whenever you need it. Now, lenders will check your credit to determine how responsible you are when handling your finances and your financial obligations. Now, of course, there are more ways than one to build credit. For example, you can obtain a credit card and make payments on time. However, one of the drawbacks of credit cards is that they come with expensive interest rates and fees, so instead of getting a credit card to establish credits, it could be smart to take out a personal loan. A personal loan has more favorable repayment terms and interest rates, right? So it won't be as challenging for you to repay it because the principal and interest are divided into smaller portions, and there's a fixed schedule on which you're going to make your payment. However, there are some do's and don'ts when taking out a personal loan to build your credit history. So read this guide and learn about them. Right? Now this, in case you didn't hear it earlier, this entire post is a guest post that was written for our page, and I wanted to make sure it's a video because it's useful. So find an advantageous interest rate. So for sure, there are many lenders that offer personal loans, guaranteed instant approval and whatever, but some are great for you while others are not. So while shopping around for this loan, make sure to compare lenders. Always pick the one with a more affordable interest rate that fits in with your monthly income, right? Don't overpay. Don't get crappy interest rates just because you think this is going to help you in the long run. Like if your credit's so bad that you can't afford the payment, don't do it. Now, the less you pay for the interest rate, the more chances you have of making timely payments. And if you're responsible and you pay, meaning that you pay on time, the better your credit score will be. Also, don't apply with multiple lenders at the same time. So don't try applying for multiple personal loans with different lenders simultaneously to increase your chances of obtaining one, right? Like find one and wait for them to, because every time you submit a loan application, it appears on your credit report, which might drag down your credit score. So, it is what it is. Now, do smash that like button to let the YouTube algorithm know that you're learning something new in this video, right? That I would appreciate that. That's helpful. Now, it will be much better to stick to a trusted lender that you believe will approve your loan application. In this way, you're more likely to have good marks on your credit profile, and you won't have had so many hits and hard pulls on your credit, right? Also, consider how much you can afford to pay every month. So it's better safe than sorry, and that's the phrase that you should keep in mind when applying for a loan. In other words, you need to consider how much you can afford to pay each month before you send in your loan application. You need to know if you can afford the amount of money that you're borrowing or asking to borrow, because otherwise you might be shooting yourself in the foot. So since you're just building your credit profile, you can go for a small loan amount so that you won't have it won't be difficult for you to repay what you owe, but it will still show that you're making timely payments. So do not get a loan from a lender with no license. Now, it's common practice now among borrowers to go online, borrow some cash, and yada yada. And while there are some good lenders on the internet, there are others whose only aim is to rip you off. So just make sure that the person you're going through has a license. Do not fall too easily for the too good to be true offers if they're not a well-established lending company. Right? Like just go through your bank if need be. Some of these people could be predatory lenders, meaning that they could suddenly call in debt, meaning you need to instantly pay, or they could increase the fees in your rate, or offer your debt up for sale to other creditors or whatever. So if you want to work with a lender, make sure to read the customer reviews about the lending company, or ask the lender if they have a license to lend personal loans, and do your homework on that company. But also read the terms in your document. Don't just sign for the loan, right? And then assess the repayment terms. So aside from the annual percentage rate, it's crucial to weigh the repayment terms of the personal loan you want to make. This is because some lenders impose origination fees or prepayment penalties, and these charges can cost you more than what's needed. So make sure you understand all the fees that are wrapped into the loan. Now, you may also encounter lenders that demand payments every week instead of the standard monthly payments. And then there are personal loan providers that allow you to choose whether to make payments weekly or monthly. And just look around for lenders that offer different repayment terms that suit your financial situation and use them. Also, don't withhold information or lie in the loan application. I know that sounds kind of, obvious, but it could happen, right? So you're committing a huge mistake if you withhold some details or give false information in your loan application. Lenders have their ways of assessing if you're being honest or lying to them, and when a lender finds out, or if a lender finds out that you're not telling the truth, the chances are that your loan application will get turned down. It could be deemed mortgage fraud or loan fraud, right, which is not a good thing, like felony, and it's just not good, right? Just not good practice. So, and then make timely payments, right? Since you're taking out this loan to establish your credit history, it's only appropriate to remind you to make the payments on time. If you fail to make the payments according to the payment schedule, this unbecoming behavior will reflect on your credit report. So make sure you make all the payments, make them in full, stay ahead on the loan, and pay them on time. Lenders will also give you specific details about the repayment schedule and the loan term, so just make sure that you know when to make these payments. If these are unfortunate circumstances, you can't pay the installment payment on schedule, you can call your lender and tell them about it beforehand to lower your risk of getting a low credit score, right? So make sure you're upfront if you run into hard times, kind of like what happened with COVID, like people were a little bit flexible-ish. Also, don't ask anyone to become your cosigner, right? For those borrowers who have not established credit history, it's common to ask a friend or a family member to cosign a loan. Having a cosigner makes it easier for you to qualify for a loan, especially if your cosigner has an excellent credit score. However, there are disadvantages when you ask someone to be your cosigner. For instance, some cosigners are not really willing to put their credit score or security on the line. They might just do it because they don't want to say no to you because you're a friend or family, so don't put them in that situation, right? And honestly, if you're listening to this and someone ever asked you to cosign, no matter who it is, the answer should be no. I mean, if they couldn't qualify for the loan, there's a reason. Now, also, there are lenders that will consider you a borrower who doesn't have the means to pay the loan if you have to resort to having a cosigner, so it's better to apply for a loan, personal loan, without a cosigner, right? Just don't mess with them, and don't cosign for anyone either. After all, you're merely building your credit, right? So as such, pick a small personal loan amount to make it easier for you to pay it, and then review the loan contract, right? I touched on this already, but you must read the loan contract carefully before you sign it. Check if there are stipulations that are not in your favor, and then review the agreement, right? So reviewing the agreement between you and the lender is crucial to avoid any problems or regrets later. All right, key takeaway. Yes, taking out a personal loan can be a great way to establish your credit history. However, there are some things you need to consider when getting this type of credit building loan. Now, you can go back to this guide if you have any clarifications. Just hit me up, right? You can comment down below and I'll answer. You can go to the article, which is linked, and say thank you to Bree for the guest post. Either way, I hope you got something out of this. If you want more information on like building credit and helping your credit score out, I don't do a ton of that, but I'm familiar with it and I understand the stuff. So if you want more information on credit scores, put it in the comment. I'd be more than happy to talk you through helping build your credit score. Have a great day, and don't forget to subscribe.